All right, what's going on, everybody? It's What the F Happened, a weekly show where we go over the market craziness and we rant and rave and just get crazy all about what's happening out there. And this week is going to be a good one because we got a lot of crap going on. Your oil prices are going up because the Middle East doesn't want to release more oil. They're controlling, not the only time this has happened, they're controlling the flow of oil, driving oil prices up. Mortgage applications are down. There is so much crap going on. We got all this that we can be talking about. But Steven, what do you think about this week in review?
What the F? That's all I got to say, because it's always a crazy news cycle. Today's going to be an insane day. It's an insane week, and I think it's going to keep on going. Things are going crazy. The stock market's up, and it's down, and it's back up today ahead of the Fed minutes. The Fed is still controlling everything. We got chaos out there, so let's get into it.
All right, let's get into it. So here's one thing. This is an economist. I sign up for this economist report, so every week I get these write-ups, these rants of one of the leading economists in the world. And he says, how do you handle the greatest bubble of all time? What is he talking about? The greatest bubble of all time? Is this the bubble you blow from the bubble gum? Nope. We're talking about asset bubbles. We're talking about the Bitcoin bubble, the gold bubble, the stock market bubble, the real estate bubble. When do these bubbles actually pop? That's a good question. You can't time the markets, but the economists are really talking about it. None other than, you guys ever see the movie The Big Short? Steven, you've seen that movie, right?
Oh, yeah.
And then that happens.
What is that?
That's America's housing market.
Oh, yeah.
Freaking awesome movie. And, you know, the guy in that movie, his name is Michael Burry. He is making lots of predictions about what's going on, but he's concerned with inflation, where the economist that I'm talking about is concerned with deflation. So you got inflation on the increase, but eventually inflation gives way to deflation. And that is what the bubble is. There's so many different aspects of what is going on out there in the market. Everything from incomes are increasing, believe it or not. Incomes, not just before COVID, but all the way through COVID, incomes have been going up in the different areas. Why? The government is printing stupid amounts of money, driving these asset bubbles, increasing people's income, which the good thing that came out of COVID is a lot of people paid off a whole bunch of debt. They were sitting home, they couldn't do anything. So what they do with the money the government gave them? Paid down those pesky credit cards. So that's a good thing, but will that hold? Now that the whole world, well, we'll call it just the US, because Canada, my northern neighbors from me, not opened yet, but the US is opening back up. So what is that going to mean? Well, that's what all this data is for. That's why I spend nauseating time reading through pages and pages and pages of economic reports so that I can do this show and we can talk about it. But I want to hit on this. This is a whole modeling, and this is boring stuff. You know, I don't want anyone to really get into this, but what this says is, it says the economic cycle in my key hierarchy all converge at the point, or all converge into a major stock low happening around late 2020, a once in a lifetime event that almost no one will see coming. Like, listen, right here, folks, lots of converging, lots of numbers, lots of stuff, all that you can see, like boring stuff, or is it reality? Is this really where it is? What's the most important thing here to watch? The dominant cycle is peaking now. The 45-year cycle is especially potent for forming a major long-term bubble every 90 years. You know, I had some jackass, like on, I don't know what site it was on, TikTok or Instagram, sit there and debate with me that it's not a 90-year cycle, it's a 100-year cycle. I literally wanted to just like be like, dude, shut the F up. You have no idea what you're talking about. It's a 90-year cycle. Did you go to school to become an economist? Because this dude did. It's a 90-year cycle. This cycle was due to peak around 2020, but it did peak. But the escalating stimulus, especially after COVID hit, instead it created one last and more, or he's the most extreme bubble run. So we're talking about a 10-year cycle, a 45-year cycle, a 90-year cycle, all converging into this one event, which many people, and there's books written about it, the new Great Depression, many people are saying this is going to trump the 1929 Depression. And here's what's also funny, folks. Since we're talking about the market and what the F happened, look around. Look at what's going on. How many of your friends, folks, do you know are piling money into stocks, into Bitcoin, into Ethereum, into shit coins like Dogecoin? I mean, whatever. But how many people do you know that are putting money into these things? I bet you all of you do. Steven, you know anyone putting money into those?
Oh, I know quite a few. Yes.
Yeah, my best friend, I was just at his cottage, and I try not to talk business with him or anything because he doesn't listen to me anyway. And, you know, sometimes the people closest to us that we should want to help, they don't listen to us because we're too close. He doesn't, if I tell him something, he does the complete opposite. And we're talking, and I'm like, you know, so, hey, you never ended up doing that thing I told you to do, did you? Oh, no, you know, I talked to this guy and that guy, and they said I should put money in Ethereum and I should put money in this stock. And I said, are those people financial, like, experts? Oh, no, it's just this guy that I know that's done pretty well in the market. Listen, everybody's done well in the market lately. Markets are going up. A monkey could throw darts. Listen, a monkey could throw darts. That actually stick in the wall? That was a pretty good throw. And Harry right here, that thing whizzed right by her. A monkey can throw darts just like I threw that pen, and whatever it hits in the wall, whatever stock it hits, it probably will beat you in the market. But that's the thing. When you're in a bull market, everybody makes money. A financial advisor, and I'm so sick to death of listening to financial advisors talk to people about putting their money in the market. Advisors' jobs, from how I understood it for 16 years of being a Wall Street financial advisor, 16 years, our job was to make sure our clients didn't lose money when the markets went down. Our job was also to make our clients money, but when the markets go up, everybody makes money anyway. So it's super easy. But our real job, how I was trained, was when things get hairy, when things get sour, like right here, the flash crash, the sovereign debt crisis. Our job is to protect our clients and make sure that their needs and their goals are observed and they can still hit them. That means an advisor's job is important when everything's bad, not when things are good. But advisors are plowing money into the market to make more money. Why? Because they charge fees, don't they? They sell products and charge fees. That's what I did. And when I managed more money in the market, I made more money. So if I tell my clients, hey, listen, we should probably sit this one out. We should probably move it into 20 to 30-year treasury bonds. All of a sudden, now what I'm doing is sort of taking some money out of my pocket because I'm telling them to exit the markets. That is not what advisors are doing. They're plowing people's money in. I had to get a load of this, Stephen. So I was talking to a client, and this client's got a lot of money. And we were talking about, you know, the potential market, you know, crash and everything else. And he's super nervous. He's retired, not retiring. He is retired on a fixed income. And he's heavily invested, aggressively invested in the stock market. So he was thinking, all right, well, I'm going to pull some money out and I'm going to put it into something safe. I said 20 to 30-year U.S. Treasury bonds or that ETF called TLT. I'm not making a suggestion, but it's just an easy way to do it. That gives you exposure to U.S. Treasury bonds. And he goes to his advisor, a Morgan Stanley advisor, a good advisor. And you know what the advisor said? His advisor said, that's a terrible recommendation. To put your money in U.S. Treasury bonds that pay 1.5% or 2%, you're not even beating inflation. I literally did one of these being like, this advisor totally forgot what his job was because he's telling this client that is retired that that's a stupid decision to take his money out of the stock market when it's high. And remember, Warren Buffett said, buy low, sell high, and don't lose money. So when the market's high, shift your money out of the market into safer asset classes like U.S. Treasury bonds. But his advisor said, keep your money in the market. Don't move it into these U.S. Treasury bonds because you're going to lose to inflation. So let's say inflation's 5 and you're making 2. You're losing 3%. But that's not what you use U.S. Treasury bonds for. You see, when the markets are going up, 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 Treasury bonds are going down, 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 down because they're inversely related to interest rates. So when the markets go up, interest rates go up. When the markets go down, 2022 or 2023 by all these economists' predictions, when the market tanks, what happens to U.S. Treasury bonds? They skyrocket. I did the math for this client. And I said, listen, based on what happened just last year in COVID, had you bought U.S. Treasury bonds prior to COVID and had you sold them during COVID, you would have made 21% in capital appreciation. Now, how many of you would be excited making 21% risk-free? Stephen, would you be excited about that?
I'm all in.
Right, 21%. And it happened in a few short months. You would have made 21%. But the advisor told him, no, you're only making 1.5 to 2%. That doesn't keep pace with inflation. Well, what about the appreciation when the whole market crashes? Oh, the market's not crashing. Whoa, whoa, whoa. Advisors seriously have forgotten what their job is. And I don't mean to hit and harp on any advisors. I know there's a couple people, that are advisors on here. I'm not saying they're bad, but literally remember what your job is to do. Your job is, yes, to make your clients money, but it's easy when the markets are up. Your job is to protect your clients' needs, goals, and dreams. And to do that, you have to follow simple rules. Buy low, sell high, and don't lose money. Sorry, I went on a rant there.
Yeah, let me say one thing on that too, Chris, is people that are at retirement age, I almost blame them. Like, if you haven't learned your whole life that markets can crash, and if you don't take your money out at the right time, or at least around the right time, like right now, and you need that money and you lose half of it when the markets crash, like, it's almost on you for not learning your lesson over a lifetime. In my opinion, the people that I feel for right now are younger people. Even though, yes, they have time over their lifetime for that money to come back and continue to grow later on, a lot of them are out there dumping their whole life savings into these like Robinhood accounts and these Webull accounts and these crypto accounts. And they're listening to these talking heads on the TV, and they're listening to the advisors that are on CSNBC and things like that. And they're telling them, hey, everything's great. Keep buying. It's awesome. Nothing's ever going to happen. This isn't a bubble. This is all transitory inflation. There's no problem out there. There's nothing wrong. Those people I feel bad for, because they don't know any better. Since they were old enough to remember, since 2010, look behind you on your chart. For the most part, we've had one hell of a bull market run. There's been a couple little corrections, but that's nothing. That is nothing compared to what's coming up in the next year or two. And those are the people that I feel bad for, just because they don't know. They've never experienced it. Those of you that are retired, you should know better. Look at that.
Absolutely. I mean, when is this thing all going to let loose? That's an interesting question that we don't have an answer for, because you can't time the market. But if you can't time the market, wouldn't it just make sense to understand one simple thing? The markets, and this is 100% fact, no one can disagree with this, the markets are at an all-time high. So if markets are at an all-time high and your stocks are at all-time highs, what would make sense to do? Well, if you listen to Warren Buffett, who might just be the greatest investor of all times, he says, buy low, sell high, and don't lose money. But is that what people are doing? No, they're doing the opposite. People love, and listen, I bet you a bunch of you are these people, or you know somebody that this is. You buy high because it feels good. The euphoria, the FOMO, the fear of missing out. Oh my God, if I don't buy Ethereum like my friend Jack did, if I don't buy Ethereum, I'm going to miss out. What the F are you missing out on? Like, you're missing out on what? With the good feeling of buying high? Oh yeah, that's what I'm missing out on. And then what will most people do? Sell low. Because when they buy high and then they lose money, eventually they're gonna be like, oh, that wasn't a good thing. God, I can't lose any more. And they sell low. And who's buying when people are selling low? Me, Steven, Warren Buffett, all of them are buying when everybody else is selling. That's how markets work. There's always somebody selling and somebody buying, or somebody buying and somebody selling. It's how it works. So in order to buy low, all you got to do is wait till there's blood on the streets. Wait till everybody else is losing their ass and then losing their assets, and then buy. That's so simple. But the problem is patience. Some reason the younger people, the younger generation, I don't want to blame the millennials, but patience doesn't really exist anymore. It's everything is at our fingertips right at the moment when we want it. So we forgot how to be patient and just wait for things. And plus, being patient is boring. How many of you like being patient? Any of you? Comment in if you guys like that. This is what the F happened, a week in review of the markets. I want to know how many of you like being patient, because most of you probably don't. And my best friend doesn't, clearly, because he bought in high. And then his excuse when it was low, because he kind of was like, well, I'm down quite a bit, but I'm in it for the long haul. I am literally, if I got paid a nickel for every time somebody told me that, oh, I'm in it for the long haul. If I got a nickel, I'd be a multimillionaire just on that. But the thing is when you think you're in it for the long haul, I'll bet you 99% of all of you that think you're in it for the long haul, you won't be in it for the long haul when the whole thing crashes and burns, because you'll be like, oh my God, I can't lose it all. I'm going to get out and keep what little I have left. Mark my word. You don't know it now, but history proves it. And I've seen it firsthand. That is what happens. And you're right. Like, who's this? Candace coming in from Facebook said, don't like it, but it's the best to do. And that's a great way to look at it. You have to wait for the good stuff. And that is, unfortunately, maybe a year, 2 years, heck, maybe it's 3 years down the line. Like, sit on the sidelines, make a little bit of money. Man, this is what I'm talking about. Like, we go off on these rants. So what did Drew say? This is why I got out November of 2019 and have basically been in cash since then. Drew, smart choice. So listen to this. Like, this is Drew coming in from YouTube. Drew got out last November. Now, most people, or got out not last November, but November of 2019. Most people would be like, wow, Drew, you missed so much. He really didn't. He didn't miss out on anything because he was following his goals, his needs, and he didn't want the risk because, hey, you never know when it's going to happen. I wouldn't sit in cash. I would certainly park a chunk of it in U.S. Treasury bonds, because then at least you're going to, at least make something. And when the whole thing, collapses, you get that big push up in the appreciation. So thanks for chiming in, Drew. Stephen, what should we wrap up with here today? You want to talk about the fear index? Did we hit that one?
Yeah, I mean, it's kind of just sticking around the middle there. We were looking at, we talk about the fear and greed every week. It looks like it's creeping a little bit back towards the middle, neutral, greed, fear. Nobody really knows what's going on. If you don't know what's happening right now, I mean, yeah. I mean, all the signs are there, right? I mean, the inflation, everything's way up right now. The jobs are still, there's so much unemployment. There's still so much demand for jobs, and just nobody's going back to work. I mean, still everywhere you go, that's what you hear. Sorry if the service is bad. We can't get wait staff. Sorry if we can't help you here. We just don't have the service. You call the airlines, it's a 4 to 5 hour wait because they can't people on the phones. You go to TSA, it's a 2 hour wait at the airport because they can't get agents in their work. You can't get help anywhere right now, right? So you have that going on. We have mortgage applications are at their lowest level since before the pandemic. So the housing market's starting to cool a little bit, it seems. There's so many little signs of what's coming right now. To me, that fear and greed index should be in the bright red, down there about 5 or 10%, where we're extremely fearful of what's coming, but we're not there. So guess what that means? That tells me now's the time to get the hell out, cash out, sell high, and don't lose money. Get ready to buy low because things are coming back down.
Let me end on this. 1929, okay? In order to understand what's coming, we have to understand what's happened. The history lessons that we should be learning will repeat themselves. So 1929, all of you know of the Kennedy family. Kennedy Sr. is getting his shoes shined. That was a thing back in the days. He's sitting there while his shoe shine boy is shining his shoes. And while he's getting his shoes shined, Kennedy is listening to this shoe shine boy give him stock advice. The shoe shine boy is literally advising and giving stock tips to Mr. Kennedy Sr. Think about the dynamic of that, right? Kennedy Sr. listens to this, doesn't say anything, doesn't say, boy, I know more about this stuff than you will. He just listens. He leaves. He goes back to his office and he alarms his entire staff. He said, the shoe shine boy is giving me stock tips. That is a very good sign that we've reached the top and it's time to get out. He did. He exited the stock market. It took him a little time because he had a lot in it. He got out and he shorted the market. And all of you can look it up and Google Kennedy Sr. shoe shine boy story, and you'll hear what happened. But he made hundreds of millions of dollars because of that one decision when he could have lost it all. Sometimes we have to do the opposite of what everybody else is doing. When the shoe shine boy, the person at the coffee shop, when your friends who know nothing about stocks, but they just opened a Robinhood account because they saw something on TikTok, they're giving you stock advice. When someone like my best friend is buying stocks on someone's recommendation that knows nothing about stocks, is that a sign that it's time to get out? Is that a sign that we should listen to Warren Buffett's buy low, sell high, and don't lose money? I don't know, but that's what I'm doing. That's what Steven's doing. I'm out. Don't even tell me that I'm missing out, because you know what? You're going to be missing out if you don't watch the signs, follow what's coming, and understand that the history will repeat itself yet again. And that is a wrap for this week's What the F Happened. So join us next week. We do this every week, same great time, same great place. We'll see you then. Thanks for joining.